Daljeet Singh is here along with Nuresh and Kunal. Daljeet, I'd like to take our discussion forward with metals. One section of the market believes that the US economy may not be doing that bad. The macro data from China is also supportive. So metals is the place to be. They're beaten down. And also, there is a view that if the slowdown actually continues in these two economies, this trade may be very short-lived, the metal long trade. Do you believe in this trade, or it is just a point A to point B and not worth really making it a large part of the portfolio yet?
Good afternoon, Ajay.
Maybe.
See, we are right now very much overweight on metals. As of now, I think almost 8 to 10% of our portfolio is exposed to metals. And normally metals is a technical call. So metals is never a 3-year, 5-year lock-in story, that you buy it and forget about it. Your next generation will look at it like that. We don't buy metal stock like that because there are so many things which work. There are so many moving parts there. Either it's global macros, it's local macros, then company specific issues. So metals normally are a trading opportunity only. And we have also taken with that view. Right now, we believe that there is a lot of potential there, mainly because once that valuation wise, they are not obscenely high. Second, the way the Indian government is putting focus on infrastructure development, and especially after the elections, we expect a lot more push coming on to the infrastructure. So the demand from our side will remain very strong, and currency, local as well as international, is in favor. So all these factors make a conducive environment for metal stocks, and therefore we are exposed to them.
Right. Kunal, I wanted to come and talk to you also about metals as well. These have been buzzing today as well. Kunal, in terms of metals, anything exciting that you're finding right now? Anywhere you see real value coming in for these metal stocks on the charts?
So on the index front perspective, first, the Nifty metal index has broken past above the 50 DMA. Now this is at a point when most of the indices are struggling below the respective short-term moving averages. So that's a very strong sign that we may probably be looking at a revival for the metal sector going forward, being one of the first ones as compared to even the other formidable sectors which have been correcting over the last 1 week or 2 weeks. Now the second interesting part is that which are the stocks which are leading from the front. So even if you do a dipstick analysis in terms of the stocks which have fallen down in the last 2 weeks by a margin of say 15 to 20% and 15% broadly, and then have corrected or come back towards the 5%, 10% retracement, which means correcting more than or completing more than 50% of the retracement. The likes of Tata Steel looks quite strong in that aspect. Jindal still has come back about that 800 levels, looks quite strong. So both these stocks are the more formidable ones. Then SAIL, I think, is the other stock which I think time and again has been taking very good support at the 120, 125 range. That stock has also made a very strong comeback. JSW Steel is trading above the 200 moving average. So there's a minor comeback, I would say, from JSW Steel also. But I believe the stronger ones are the likes of Tata Steel and JSPL.
Daljeet, wanted to draw your attention to Reliance Industries because even in the recovery that played out post Wednesday, Reliance has had a big contribution. What do you think is fueling the move on Reliance?
I think this is the rotation towards large cap, basically. If you have to take out money out from, and there's so much of talk about froth being built up in various segments. So if the institutions are forced or they're just like made circumstances are making them that they have to get out of certain smaller mid and stocks, then where does that money go to? So the natural progression is that it has to go to some large cap, and within the large cap, probably Reliance is the first choice because it has not, it's not valuation wise not very costly. There are a lot of trigger points for the stock to perform. Or after quite a few months of consolidation, the stock had come out of that phase and started moving to the new highs. So normally, if people would want to go with a stronger stock at this when they're rotating out of some stocks, and especially locking out their profit from those stocks. So I think it's just that rotation which is happening. Trigger points for the stock for Reliance remain as it is. The new energy initiatives that they are taking. Of course, it is a 3-4 years kind of call. It's not immediate that the profitability will start flowing in. But these days, just an hint is enough. No, semiconductor stocks are trading at 100 multiple So here, at least these guys are spending 75,000 crore on new energy. Market is willing to give them that benefit.
Reliance doesn't really capture much of the new energy business in its sum of parts yet. Maximum 150, 200 bucks. So not even 10%. But there's another space I'd like your opinion on is the capex kind of stocks, capital goods in particular. We were speaking with Chetan Aya of Morgan Stanley this afternoon, who's making a case that we are at the cusp of a start of a new capex cycle. The last one, which he saw between 2003 and 2007-8, this one is similar to that. Let's get an opinion and then we'll discuss stocks, how to play them.
When you're thinking about this cycle, the way to think about it is to compare the investment growth trend in this cycle versus 2003 to 7. So in 2003 to 7, we had seen investment to GDP go up from the trough of around 28% to the peak of 39% by F 2008, or call it calendar year 2007. And in this cycle, something similar is happening. So this is an important driver to growth. We've seen that initially it has been driven by within capex, by public capex picking up. And now we are seeing growth broadening out within investment to private investment picking up.
Right. So Daljeet, how would you play the capex theme right now? What are your favorite capital goods stocks or engineering ones that you have in your portfolio?
So we are adding some of them. As of now, I don't think we have any capex stock right now. Infrastructure we have added 2-3 months back. Some road project companies and those we have added. But machinery or cap goods per se, now we are evaluating 3-4 ideas there. Basically, we tend to go to mid and the smaller ones instead of just going to the L&Ts of the world. And we try to find the niche areas. So I think there are a couple of ideas which we are working. Maybe in next 1 month or so, we'll be adding some.
Nuresh, would you like to suggest some capital goods strong counters which are looking good to you? Because this place has got corrected and then went sideways, now gradually coming back.
So I would go more on the mid cap and the small cap side, which is where we've seen strong volumes happen in the Triveni turbines or a TD Power, where consolidations have been good. So Triveni turbines hit a new all-time high, then consolidating around those levels and have shown relative strength. So in terms of capital goods, a lot of these ABB, Siemens have already gone up quite a bit. So the opportunities are there on the mid cap side more. So I would be looking at a TD Power, Usha Martin, and say a Triveni turbine. So this basket looks interesting.
Turbine, Usha Martin, these are some of the stock ideas coming in on the charts, of course. We'll take a very quick break on that note. The recovery seems good in place, but let's see whether it can spread around to the rest of the market or not. For now, we're at the highest point in the day, led by Reliance and L&T.
Still in discussion with Kunal, Nuresh, along with Daljeet. Look at the market. I want to talk about hospital stocks with you, Daljeet. After that entire story of how the treatments would be regulated and it will be at par with the public sector hospitals, all of that, this entire space went through a correction, and rightly so. Some of them started trading at 60-70 times 1 year forward, and still way off the mark from that the recent peaks. Would you be comfortable in getting back in some of these hospital names?
I'm very bullish on the sector as such, because this is a place where we see a lot of potential for many years to go. By the nature itself, we have so much of population, penetration levels are so low, and there is huge scope for expansion for all these companies. Now, of course, you have to be mindful of valuation. Incidentally, in last 2-3 years, this sector has seen a lot of PE investments, a lot of private investments coming in, which had just inflated the valuation to a very large extent. So probably this Supreme Court ruling actually become a trigger point for people to take some profit out and bring back some sanity in the valuation. But I think still there are valuations are on the frothy side. So we will have to be very choosy amongst all these stocks. I'm very bullish, as I said, on the sector, but one has to be very choosy while selecting the stock, where at least some kind of valuation comfort would be there. Now, where will that come from? That will come from either the expansion plans that these companies have, and if somebody has land bank available, or somebody is doing technical expansion like joint venture with some already existing hospital. So then, because 40 to 50% cost is the land cost. So if you can save on that, then your return ratios will be much better. So like that, if you can find some stocks where there is some potential like that, then probably one should look at it. But the sector has a lot more potential, no doubt about it.
Daljeet, surprisingly, IT has made a comeback, and the market was, I guess, focusing all on the capex, the infra theme, the PSU pack. But that said, some of these stocks have not done bad. I mean, we all know Persistent, KPIT have been some of the great performers of the year gone by. TCS, etc., also scaling at their lifetime highs. Today may be a one-off day, but what's the take on IT?
So IT has become very kind of a mystery. So, but someday you feel it's so good, the valuations are in your favor. Then, if you take a top-down call, and if you hear all this recession looming large, problems at macro level all over the world, then you understand that probably there is not too much of scope for these guys. But somehow, I think the stock valuations are also working in that fashion, that most of these stocks had come to a good valuation point, if not very attractive, but at least they are reasonable valuation. So if somebody has cash, instead of keeping cash, fund managers like us, if we would have cash, I would not want to keep it cash as such. No, instead I can use these large caps and the frontliners, and maybe then that will give you some kind of yield. No? So to that extent, we are using IT, but we are out of IT as of now, not too much. I think one or two stocks, that too very small portion, only as a proxy to cash.
What about private banks, Daljeet? They haven't quite played out as one would have thought they would. I mean, yes, HDFC Bank is touted as the comfort trade right now, but even at 1450, it's not a whole lot up from its 52-week lows.
Sorry.
Daljeet,
No.
the question is on private banks to you.
Sorry, I lost you in between. You were talking about HDFC Bank, but then I lost.
Sure, I'll repeat my question. Just wanted to know as to why, or rather how this was touted to be as one of the most, valuation comfort kind of ideas in the market, the large cap private banks in specific, but it hasn't quite played out to be that fantastical trade yet.
In simpler terms, I would say it is just testing the patience. So if you are really a long-term investor, this is the time for such kind of stocks, no? When you can accumulate them. Of course, we know that for HDFC Bank, it will take at least 1 year to come back to some proper shape, because they've done a merger which is such a large merger. So obviously, all these ratios get haywire, and things will take their time. So for a small company to get merged into another company, it takes 1.5 year, 2 years. In this case, we are talking of a big behemoth. So I think it is just a matter of patience. It is just a matter of that conviction that ultimately at the end, the result will be in your favor. Now, if you're impatient, and if you want to see the result every quarter, or just 2 months down the line, when I buy after my buying immediately, I should see something there. That's not going to happen. So if one is of the very clear view that, yes, I'm accumulating, with the view that after 1 year, 1.5 years, this will be a big thing, then one can look at this stock. As of now, we have not invested as a disclosure in HDFC Bank or any of these private banks right now, because we are already very well invested in BFSI space as such. So there are 2-3 NBFCs, there are 2-3 PSU banks already there. One private bank is also there, smaller mid-cap private bank. So we don't have space for BFSI. That is why we have not just added. But yes, it is one of the potential candidate for addition at some point of time.
Okay, Just quickly, let's shift focus and talk about Shipping Corporation of India. Now, Shipping Corporation's demerged entity, that's Shipping Corporation of India Land and Assets, actually set to debut on the exchanges tomorrow. That's March of 19th. What more are the details? How is the value actually coming in there? Sharad is joining in with us with those details. Sharad?
Well, of recently, if you look at the value unlocking happening from the government companies, this is the second instance. The first one we did see BML Land Assets, which was also listed. Now, tomorrow is an important day for Shipping Corporation as their land and assets, the separate arm gets listed in the bourses. Now, do remember that's roughly 46 crore worth of shares, which is in focus. But the important thing is what would be the price of this, what's the price discovery coming in. On the date of spin up, as per our calculation, Shipping Corporation's price ex demerger that stood at roughly 121 rupees, while post demerger for Shipping Corporation the price stands at roughly 94 rupees. Now this is a theoretical price which has been calculated, and importantly for the demerged entity, which is the land and assets arm which would be in focus, the price is around 27 rupees. Now that's the base value expected as per the calculation. Of course, it includes a lot of non-core assets, especially situated in Mumbai, and also a transfer of surplus cash would be there of roughly 1000 crore odd rupees. Now the non-core assets, if you look at the asset size, it's roughly 14,423 crore rupees. And as per calculations, the book value that stands as roughly 310 rupees per share. But the important number which you should be focusing on for tomorrow on the listing would be the value of the demerged entity, which is roughly at 27 rupees when it comes to the base value.
Right. All right. So that's the there's a corporate action which is happening in Shipping Corporation. It will be interesting to see how the street actually values this demerged arm. A lot of big PSUs have actually fallen quite a lot. Talk about OMCs, some of the metal and mining PSUs, the renewable one, IRIDA, even NTPC Power Grid have come off their recent highs. Anything which interests you, Nuresh, out of the beaten down PSU stocks to get back into?
So out of the beaten down names, the list would be first to look out for the OMCs. If we see another 5-6% correction, they'll come to a very interesting retest price point. Multi-year high breakouts happen in that sector. So waiting it out, if they drift a little more lower, that would be one section. Second would be to look at, again, oil and gas, which is where ONGC, if it drops down to 240 to 250 band, that would be an interesting price point. Same way, 160, 170 for GAIL. So overall, looking out for oil and gas names in the PSU basket, that could be interesting in the current correction.
Oil and gas in the current PSU basket is what you would be looking at, Nuresh. Kunal, I want to get your take on these other PSUs as well. Other than oil and gas, is there anything attractive that you would look at in terms of PSUs? Would you be looking at even any of the banks still in terms of the PSU banks that you would look at?
Yeah, PSU banks may be the preferred trade, maybe a better trade, but I think a preferred trade over here from the PSU pack should be the defense pack. I think the likes of HAL, BEL, they would still look very attractive, because these stocks have corrected, significantly less compared to many of the other peers. So what you would actually want is a better, beta for these stocks, and a much more stronger trend, which has been sustainable for these stocks over the last so many months as well as over the last many years. So I think that's a formidable sign for these names. PSU banking stocks are more high beta in nature. So, if the market was into a very strong uptrend, then these stocks would probably have started to trend up higher. We could have seen completion of breakouts for these names. But then in these kind of market scenarios, I would probably expect that these stocks broadly consolidate a bit more.
Right. Kunal, since we're on the subject, let's also have a chart check for HDFC Bank. I mean, it's slowly grinding upwards, but when do you see a meaningful move come by?
Well, that will come by maybe over the next couple of weeks for HDFC Bank. I would probably expect another 50 to 80 point jump on the stock. My expectation is that once the March expiry closes out for the stock, post that is where we would see a start of a fresh move of fresh expiry, because the move or the first leg of sell-off which started off for HDFC Bank was in the month of January, and I've seen this phenomena over the last so many years, that generally a sell-off or a sell-off or a correction into a trend lasts for 3 expiries. So we would probably complete the March expiry by the end of this month. I think post that is where I would expect a meaningful up move, a strong uptrend, a strong participation, which would come back to HDFC Bank.
Mm-hmm. Also pull up Coforge. Despite of a big pullback in the market, broader markets included, Coforge is just not. In fact, it's fresh lows, 9% lower. Daljeet, have you looked at the news announcement from Coforge saying that they want to raise almost 3,200 crore via QIP, and this is not the today's fall alone. If you look at the last 1 month, from 7,000 upwards, the stock has been sliding lower. What is the fear or concern of the market in your view? Some of the end of the brokerages are saying that they may actually bite much more than they can chew via this QIP. That's the fear. But what did you read this entire thing or observe it?
I think they've gone a little bit more aggressive on fundraising. Market was expecting that they will do fundraising, but I think our analyst was expecting something like 1,100, 1,200 kind of number, but they have gone to 3,200. So that has raised the doubts in mind that either when you are flush with too much of money, either you overpay or you do a acquisition which is more than what you can digest. So all those, I think, doubts are coming right now. Although management has been very good, fantastic. They have they have a very good track record. They've been delivering very well. So there is no cause of so much of worry. But I think it's just that the expectations were much lesser for fundraising. That's why the stock is correcting too much. At what time, price, the valuation, because we were not looking for adding it to our portfolio, so we didn't go to that depth that whether at what price will it become attractive for us. Because as I said, from the top down approach, we have just taken the call that we are away from IT. So we have not gone to the extent of calculating that price where it will become very attractive to enter. But I think it's just that the doubt in the minds of investors right now. And this kind of fall is actually for somebody who's taking a call on IT. This is a good stock to look at.
Okay, thank you so much, Daljeet, for joining in with us this afternoon on ET Now. But on that note, markets, when you look at it, yes, off the day's highest point, but nonetheless managing to hold on to the 22,000 mark. We'll slip it to a short break and we'll be coming back with more updates on the market.